Diversification is for those who don't know actually about the market. If you are not that a good picker of stocks and if your analysis is not that good, in that case also, out of the 10 to 15 stocks, only 1 to 2 or maybe even 5 multi-bagger return of that set of stocks, say 5 stocks out of the 15 stocks, is sufficient enough to pull up your portfolio and cut all your losses in the other stocks. It is not that somebody traded some bulk of stocks and then the price went up for a day or two. It's not a sustainable profitability. But on a longer run, if you allow the business to grow and its earning to compound and then the stock price to go up, that is a strong compounded wealth creation, and it will be sustainable and will be there to create real wealth for you. You don't have to hold, in the name of diversification, a huge set of stocks or assets in your portfolio. You should select specific trustworthy stocks on which you have done proper analysis, and then you should give time for that. Hello everyone, today we have an interesting topic. How many stocks to hold in your portfolio? So these days I am seeing, in the name of diversification, investors are bringing in more than 50, 60 or even 100 stocks in their portfolio. Well, in that case, when it comes to mutual fund also, in the name of diversification, a large number of stocks or even a large number of mutual funds are also invested into by the investors. But if you see, as Warren Buffett once told, diversification is for those who don't know actually about the market. If you are very clear on the specific stocks which you are holding and their future potential, then you can always have a concentrated portfolio. Now the point here is that not about which stock to own. It is about, say, if you are selecting 10 to 15 stocks in your portfolio, then maybe if you are not that a good picker of stocks and if your analysis is not that good, in that case also, out of the 10 to 15 stocks, only 1 to 2 or maybe even 5, the multi-bagger return of that set of stocks, say 5 stocks out of the 15 stocks, is sufficient enough to pull up your portfolio and cut all your losses in the other stocks. So it is very clear that it is not necessary that all the 15 stocks will be a multi-bagger stock or it will go up. But if your analysis is correct, true, genuine, and with lot of data backup and true analysis, then in that case, this is for sure that at least the 5 of them, as I told, out of the 15 is bound to go up. And also it is obvious that many a times maybe 10 out of 15 is a super hit, but still on a conservative side, even if the 5 stocks are performing well, then it will pull up your complete portfolio up, and overall you will be in a high rate of compounded profitability over the years. Yes, the term here over the years is very important, because if you are a short-term trader or if you are looking at a very short duration, then this formula doesn't happen. You need to hold long in the sense, it is not that I am telling that even if the stock goes so low and you should keep holding that. It is that you should give, fundamentally, if you think, you should give time for the company to expand its business and then generate good amount of profit, and hence it will reflect in the earnings and its valuation, and the stock goes up. That's how really the stock valuation or stock price goes up. It is not that somebody traded some bulk of stocks and then the price went up for a day or two. It's not a sustainable profitability. But on a longer run, if you allow the business to grow and its earning to compound and then the stock price to go up, that is a strong compounded wealth creation, and it will be sustainable and will be there to create real wealth for you. So point here, in a conclusive manner, if I talk, is that you don't have to hold, in the name of diversification, a huge set of stocks or assets in your portfolio. You should select specific trustworthy stocks on which you have done proper analysis, and then you should give time for that, so that a few out of that stock, at least, if not all, will give you compounded returns, and you will reap that benefit of long-term investing. Yes, I know that many people become so impatient that if you get a 30% rally, you just sell it and then later repent that the stock has gone 2 times or 300 times, 400 times. So you really need to believe in the story, growth story of that particular company whose piece of that business you are buying in the form of stocks. As I always say, it's a piece of business. It's not a ticker or it's not a stock which you use for trading. It's a business, a piece of business, well managed by a company owner or the management of the company. You are trusting the management, their future prospects and their future projections, and you have researched well, and then after your proper fundamental analysis, you are investing in that stock. So in such a case, you have to give the incubation time for the stock to mature and reach its peak. Then yes, if after a 5-year, 6-year period, and if you feel that the stock has reached its full potential and the growth story is changing, or maybe the management is changing, or the complete scenario is changing, then in that case you can reconsider selling the stock and investing that in another undervalued stock. Or maybe in the same stock, if you get a correction, then once the profit is booked at a higher valuation, and then you can re-enter that stock. But then I would say avoid that swing trade or trading tendency. Stay invested in a single stock even if it dips. I will again take a case of Indigo, wherein some few years back the stock I had bought at some around 800 rupees and it had fallen to 620 rupees. That too in a few months after me buying that. So in that case, if I had sold that stock, considering that my price is 800 and it has fallen to a big dip of 620 rupees, then currently I think today it is touching 6,000 rupees. So that rally I would have missed. So it has become 6 times from my buying price. So that rally is what I am talking about. The patience of holding long and participating in the journey without worrying about the few stocks which are laggards in your portfolio. That laggards are bound to happen always in someone's portfolio, because you are not got to select every stocks of which all of them are multi-baggers. So that is one single point here. Also, the other point is that if you have a large portfolio of n number of stocks, you will have to track all of them, and you may not be an expert in all of that stocks or their everyday news or the geopolitics related to, or even the macro or microeconomics related to that stock. You may not be able to track in your current salaried job. So in that case, a few number of stocks, ideally in the range maximum from 20 to 25 stocks is what you should hold in your portfolio. I would say ideally 15 to 20, but maximum of 25. So that's what you should hold, so that you can monitor each and every one of them in a proper way and participate in overall wealth making journey through stock investing. See you next video. Till then, happy investing.